ANG, a private banking organization established in Spain, has formed the first crypto fund under Spanish law. The firm, with $14 billion in assets under management as of the end of 2022, launched a hedge fund that will be accessible to professional investors, ANG said in a statement released on Monday. The ANG fund will be administered by CACEIS, the asset servicing banking business of Credit Agricole and Santander, and will be audited by PwC. We considered it an optimal solution for an European professional investor who wants to approach the world of cryptocurrencies without forgetting that it is a very high-risk fund. Diego Fernandez, Elices, Chief Investment Officer at ANG, said in a statement. In 2022, the Bank of Spain began providing licenses to suppliers of services for the exchange of virtual currency for fiat currency and the safekeeping of digital wallets, to which Bit2Me, Bitstamp, BVNK, Crypto.com and Ripio subscribed. Later, in December 2022, the Spanish Central Bank announced plans to launch a wholesale central bank digital currency project and invited financial institutions and technology suppliers to submit proposals for the effort.
The US Department of Justice informed a federal judge that it did not intend to proceed with the campaign finance charge against FTX founder Sam Bankman-Fried after consulting with the Bahamas over whether it was included in an extradition document last year. The Department of Justice originally indicted Bankman-Fried on 8 different counts near the end of 2022. Prosecutors later added another 5 charges, but Bankman-Fried's defense team argued that the Bahamas, which originally arrested the former FTX CEO, had to agree to those charges under the terms of US extradition treaty with the nation. Judge Lewis Kaplan, the District Court for the Southern District of New York, allowed the Department of Justice to sever those charges, scheduling a March trial date. According to a court filing late Wednesday, the Bahamas did not include the 8th charge for the original indictment, a campaign finance violation, in its extradition treaty. The government has been informed that the Bahamas notified the United States earlier today that the Bahamas did not intend to extradite the defendant on the campaign contributions count, the Department of Justice letter said. Accordingly, in keeping with the treaty obligations to the Bahamas, the government does not intend to proceed to trial on the campaign contributions count. The notice comes hours after a hearing over Bankman-Fried's alleged attempt to discredit former Alameda Research executive Caroline Ellison by sharing private documents with the New York Times. Assistant U.S. Attorney Daniel Sassoon opened the hearing by announcing the Department of Justice wanted to remand Bankman-Fried into custody. Judge Kaplan declined to rule on that motion during Wednesday's hearing, instead setting up a schedule for both the prosecution and the defense to file written submission on that matter. In the meantime, he imposed an interim gag order preventing Bankman-Fried from communicating publicly. Bankman-Fried is currently set to go on trial on October 2nd. The Department of Justice letter did not say if prosecutors intend to fold the campaign finance charge into the second trial in March.
The House Financial Services Committee advanced a set of crypto bills after a landmark markup on Wednesday. Though the fallout from crypto exchange FTX loomed large over lawmakers as they worked towards ironing out the details of bills designed to provide a unified legal framework for crypto and address blockchain-related issues, a majority of lawmakers ultimately voted in favor of the Financial Innovation and Technology for the 21st Century Act and the Blockchain Regulatory Certainty Act after a long-time markup session, referring both bills to the full House of Representatives for a vote. During Wednesday's markup, a large swath of committee members, both Republicans and Democrats, refused to support the proposed market structure bill, criticizing a clause in the bill that would allocate more power to the Commodity Futures Trading Commission. They also expressed concerns about whether the bill would weaken consumer protections enshrined by the U.S. decades-old securities laws and ultimately leave U.S. investors with fewer protections against fraud. Nevertheless, the committee's chair, Representative Patrick McHenry, praised the legislation during his opening comments, noting it was the first time a committee was marking up crypto-specific legislation and affirming that legislation is necessary to prevent the US from falling behind other countries in regulation crypto. The legislation's critics said they were more concerned with the bill's actual provisions. Democrats also took umbrage at the fact that the proposed law would grant the CFTC more authority to regulate the digital asset space without increasing the agency's funding. The CFTC has earned a reputation for being softer on crypto companies than the Securities and Exchange Commission, something Democrats have said could enable future fraud. FTX founder Sam Bankman-Fried and other crypto industry bigwigs previously petitioned for the regulator to be granted more power to regulate the space. However, Republicans supporting the bill argue that an additional $120 million in funding that was recently approved by the Agriculture Committee will vest the CFTC with the resources to do its job more thoroughly. The House Agriculture Committee will start its own markup of the Financial Innovation and Technology for the 21st Century Act on Thursday, while the Financial Services Committee marks up stablecoin legislation. The House committee votes came as the Senate added anti-money laundering provisions for the crypto industry to a must-pass defense bill. Well, that's all in Web3 Diaries. For more such updates, log on to our website www.3versetv.io or scan the QR code.